The U.S. Department of Housing and Urban Development, or HUD, and also the Federal Housing Administration last week announced a new policy which enables mortgage borrowers to request a reassessment of the appraised value of their property if they believe their appraisal was inaccurate or biased. An announcement from HUD in a new mortgagee letter clarifies the policy applies to all Title II single-family programs, including the home equity conversion mortgage, reverse mortgage lending program. Appraisal bias issues are more commonly being discussed on the forward or traditional side of mortgage lending, but entities, including the federal government and independent advocacy groups, which include the National Consumer Law Center or the NCLC, have warned that appraisal bias could also impact seniors seeking a reverse mortgage. When reached by Reverse Mortgage Daily, a HUD spokesperson said that appraisal bias has the potential to directly impact the amount of loan proceeds a senior borrower can access, necessitating their inclusion in the new policy. Everyone deserves a fair and unbiased valuation of the home that they own or are looking to purchase, said the spokesperson. This includes seniors considering a home equity conversion mortgage, for whom the home valuation is a critical factor in determining the amount of loan proceeds available to them through the program. The spokesperson did go on to say that the policy places senior borrowers seeking a HECM on a level playing field with other mortgage borrowers who are seeking a reconsideration of value. The Federal Housing Administration's new reconsideration of value policy will help ensure that seniors considering a home equity conversion mortgage, or HECM, have the ability to question the appraised value of their homes if they believe it is inaccurate or biased, said the HUD spokesperson. Making appraisals more equitable would help to boost reverse mortgage access among undeserved communities, an issue that the NCLC found to impact the HECM program in a 2023 report. For the origination of reverse mortgages, if we can do more to address bias in appraisals, in theory, the appraisal should be more equitable, said an NCLC attorney. The incidents of appraisal bias, I would imagine, are very low, but they do in fact exist. And when they do, of course, that denies, especially an older American of color or any other minority group, the ability to access a reverse mortgage. Of course, that has to be addressed. Now, just how one reports the assumption of appraisal bias or the suspicion that it has occurred and how that is investigated, we're not really privy to those facts, but as soon as we hear anything, we'll let you know here. Many industry commentators, including myself, have pointed out that Social Security's cost of living adjustments, or COLAs, often fall short of the true inflation Social Security recipients face today. Two lawmakers, Senator Bob Casey and also Representative Ruben Gallego, are seeking to change that with a new bill entitled Boosting Benefits and COLAs for Seniors Act. For millions of older adults in Pennsylvania and across the nation, Social Security is the promise of a safe and stable retirement, said Casey in a statement. As the cost of basic goods and services for seniors rise, we cannot allow that promise to be broken. The Boosting Benefits and COLAs for Seniors Act would help seniors contend with rising costs and ensure that Social Security remains a lifeline for all who need it. This bill would seek to change the standard by which COLA benefits are calculated according to the text of the bill and an accompanying fact sheet that was circulated by the Senate Special Committee on Aging. Each year, Social Security benefits are adjusted by a cost of living adjustment, or COLA formula, the fact sheet explained. The COLA is currently based on the Consumer Price Index for Urban Wage Earners, or the CPIW, from the previous year. It's reflective of the everyday spending of Americans and includes expenses such as food, consumer goods, and housing, and others. Social Security benefits, however, have not kept pace with the increasing cost of living for the majority of seniors who live on a fixed income, the lawmakers explained. They seek to have the Social Security Administration instead use the CPIE, or the Consumer Price Index for the elderly. This index weighs other costs than different CPI indices, and a larger expenditure weight for medical care, which is common to older Americans, is included. The index is specific to those 62 and older. Gallego said, "My new bill puts more dollars in the pockets of Social Security recipients to pay their bills, get their medications, and pay for housing. While such a bill, if passed, would put more money into the pockets of older Americans, which is a good thing, it's unlikely to gain the support necessary for passage, as Social Security is projected to be depleted by 2034, which could lead to future beneficiaries only receiving 78% of their full benefits." And in our last story, mortgage demand dipped again in the first week of this month as the average 30-year mortgage rate hit their highest level since November 2023. Applications for traditional mortgages fell 2.3% during the week ending April 26th, according to the Mortgage Bankers Association's weekly mortgage survey. Inflation remains stubbornly high, and this trend is convincing markets that rates, including mortgage rates, are going to stay higher for longer. No doubt this is a headwind for the housing and mortgage markets, with the 30-year fixed-rate mortgage increased to 7.29% last week, the highest level since November 2023, said Joel Kahn, MBA's vice president and deputy chief economist, in a statement. Not surprisingly, traditional mortgage lenders and originators face sustained challenges, but many are now beginning to take a first or even a second look at reverse mortgages. Innovate or risk extinction? Perhaps this is the driving force behind the increased interest in reverse mortgages by traditional mortgage originators and brokers. Many believe that mortgage demand will remain subdued until interest rates or home values make home buying a realistic option for working Americans. And that wraps up another episode of HECMWorld Weekly. Thank you for joining us. If you would like to listen, you can also find this podcast on Apple Music, Spotify, and Podbean. And if you're watching as you are today, you can also subscribe to our weekly newsletter on HECMWorld Weekly. You can go to HECMWorld.com and subscribe. That way you receive all of our content with no paywall, by the way. And we appreciate those of you that do that. Thanks again for coming by, and be sure to return next week for more reverse mortgage news on the go.